Welcome to Heart of Economy. Today we take you right into the heart of a topic that deeply affects not only the world of finance, but also global politics. The world's most powerful central bank, the Federal Reserve, simply the Fed, is facing perhaps the toughest test in its history. But this time, the challenge does not come from a banking crisis, a recession threat, or even a pandemic. This time, it rises from the shadow of politics. The questions are simple, yet the answers are dangerously complex. What happens if the Fed bows to political pressure? If the world's most powerful central bank loses its independence, what kind of storm will it unleash on the global economy? In this episode, we will search for answers together. The Fed is not only the central bank of the United States, it shapes global monetary policy. Every rate decision affects everyone, from an investor in New York to a small business owner in Istanbul. Why? Because the dollar is the world's reserve currency. That is why President Donald Trump's recent pressure on the Fed is not just an internal Washington matter. Trump wants rates to come down quickly. In his view, lower rates mean cheaper credit, a stronger stock market, and a better economy for voters. But this is a short-term perspective. The Fed's mandate, however, is different. It must protect price stability and ensure long-term economic security. If it gives in to political pressure, that mission collapses. My take, central banks focus on long-term stability, not short-term comfort. Leaders like Trump think of today, while the Fed thinks of tomorrow's. The tension between the two is what fuels today's storm. Jackson Hole is almost like a laboratory for central banking. It's where not just interest rates, but also the future of economic policy is debated. This year, the central question was, how safe is central bank independence? European central bank officials admit that politicians sometimes try to exert pressure at home. In Japan, a similar debate exists. If the Fed, the world's most powerful central bank, loses its independence, it will set off dominoes. Politicians elsewhere will say, look, it happens in America, we can interfere with our central banks too. That is why, in the corridors of Jackson Hole, the real discussion was not race but the growing shadow of politics and the risk of contagion worldwide. My take, central banking is like a chain. If the strongest link breaks, the rest will snap much more easily. Fed Chair Jerome Powell focused on the labor market in his remarks. Rising unemployment risks, slowing growth, these are all on the Fed's radar. That's why a rate cut in September now seems highly likely. Markets cheered, the dollar weakened instantly, stocks surged, a classic dovish reaction. But behind the scenes, another question lingered. Is this truly data-driven? Or is it a response to Trump's pressure? Once markets start doubting credibility, the game changes. For investors, the most valuable thing is predictability. If Fed independence in doubt, confidence in the dollar weakens. And in finance, doubt is the most dangerous emotion. My take, Powell's speech was a balancing act, but sometimes even a balanced message creates uncertainty in markets. To understand why independence matters, look at history. In the 1980s, the US was trapped by raging inflation. Fed Chair Paul Volcker took a radical step, raising interest rates dramatically. The result? Short-term recession, unemployment, political fury, but in the long term, inflation was defeated, and the US economy was placed on stronger ground. If Volcker had been under political pressure, this decision would have been impossible. No politician before an election would dare accept such pain. Only an independent central bank could take that step. Today, the Fed faces a similar test. Short-term comfort or long-term stability. My take, in economic history, the most lasting successes usually come from the toughest decision. Here is the paradox. In the short run, a rate cut feels like medicine to the markets. Stocks rise, the dollar falls, investors rejoice, but in the long run, undermined independence creates higher inflation expectations. That pushes long-term rates up and disrupts the bond market. What looks like joy today turns into anxiety tomorrow. This is what the financial world calls a credibility premium. The trust in a central bank's independence is more valuable than any single rate move. Once that trust vanishes, no rate cut can restore investor confidence. My take: markets value institutional strength more than dovish words. Short-term euphoria cannot make up for long-term credibility loss. Fed independence isn't just about the US dollar, it's the backbone of global trade. Oil is sold in dollars, and most national reserves are held in dollars. If the Fed becomes politicized, the ripple effect hits the world. In Europe, politicians will push harder on the ECB. In Asia, governments will intervene more in their central banks. Global inflation rises, volatility grows. The most dangerous outcome, the dollar's reserve status, could be questioned. If investors adopt the dollar as a safe haven, the global financial system may enter a whole new era. My take: what we're discussing today is not just America's issue, it's the future of the global monetary order. Prominent economists are sounding the alarm. Paul Krugman warns, if the Fed gets politicized, short-term rates may fall but long-term rates will rise because trust loss costs more than any gain. Nouriel Roubini, the Dr. Doom, is far gloomier. He argues that once the Fed loses independence, financial crises will emerge quickly and will be harsher than the last ones. Larry Summers goes even farther, equating the loss of independence with the death of monetary policy itself. If independence is gone, so is monetary policy. Despite their differences, these voices converge on one point. Without independence, economies collapse under the weight of lost trust. My take: if economists from such diverse schools of thought agree, the danger must be real. So what can we learn from all this? First, don't just react to headlines about rate cuts. Ask what motivations drive the decision. Second, watch long-term rates and inflation expectations. They reveal investor confidence. Third, in times of uncertainty, avoid reckless bets. Diversify your portfolio and manage risks with discipline. Because when uncertainty rises, the most valuable asset is diversification and steady risk control. My take: economics is not just about numbers, it's the art of trust. Without trust, numbers lose their meaning. In the end, the real question is not just what will the rate be. The real question is who makes the decision and on what principles. As long as the Fed remains independent, the global economy will rest on solid ground. But if independence is lost, no one will escape the storm. So what do you think? Can the Fed preserve its independence, or will political pressure win out? Share your thoughts in the comments. If you enjoyed this video and want more content like this, don't forget to subscribe to Heart of Economy. See you in the next time.